Evening, everybody. Um, Welcome to tonight's Magenta call. If you can hear me and see my screen, please give me a double Y. Thank you, Alice. Yes, I am recording this, so thank you so much for reminding me about that. Hello, Lisa. All right, so I got two. Where's my third? Where's our third lady? Where's my third lady? Do we have Phyllis on the call? And guys, don't be jealous. I just always like to see my three ladies on the call. Do I see Phyllis on the call? Let me see if I see Phyllis on the call. Phyllis. I got Alice, I got Lisa, and I see Phyllis right here. Excellent. So we have a full packed house. Welcome, guys. Yes. Greetings from the Space Coast. Thank you, Jim. Welcome, guys. As you can tell, I'm pretty excited right now. I am excited because, guys, we call this market, and I say we as all, we call this market. It's funny because now a lot of people are saying, wow, April is like the best year in the NASDAQ since 1991. But all along, while we were saying, get ready for a bullish market, get ready for a bullish market, they will all say, no, this is a bear market rally. It's not going to sustain itself. It doesn't make sense. And here we are now, and market is going higher. There are some stocks right now that are at all-time highs again. And so Marcus is saying, you're the man. Bruce is saying, yes, you called it. So I appreciate that, guys. And, this is where I was telling Tanya today, I said, this is where days like this makes you vindicated as a analyst, but unfortunately it goes quietly, right? Because nobody knows who we are. And I guess, what hurts me when I see people out there saying technical analysis does not work. And I was like, how can you say that? I mean, I see people even putting out YouTube ads. Oh, anybody that tells you technical analysis works is lying to you. And I was like, you can't say that. It's like, wow, we are truly blessed. God has given us something that has allowed us to see things that other people do not see. The other thing I get is some people challenge and say, well, how long have you been doing this? We've been doing this for 25 years. You can't tell us that in the 8 years that you've been doing it, you know more than us. And it's not necessarily even about bragging, but it's just that, you know, when I started this journey, I I realized that I wanted to see the truth. I didn't want, some type of fake story about what you should have, could have done, would have done in a hindsight. I wanted to see how we can actually see things and anticipate things. And I'm very, very pleased to say and happy to see that and like I told people, we've called bottoms, we've called tops multiple times, but unfortunately, we are the unsung hero. We don't, people don't know us. And when I say us, I'm not talking about just myself. I'm talking about even you guys on the call too as well. So, but technical analysis works, guys. And, this is where, again, is this going to all-time highs? I have no idea. I can't really tell you that. But what I can tell you is what I'm seeing. And what I'm seeing is that they've been buying. And they've been buying since, I remember March 23rd when I say, don't short anything anymore. Like, things are changing. And I said, this is what we can expect. And those things are happening exactly as we anticipated. The only time we were wrong since this market started rallying was when this happened to us right here. This was the only time where I said, okay, well, maybe it's ready to go back down again. And then it gapped up. And if you guys recall, on that day, I said, look, I've seen this before. I said, it's time to buy, buy, buy. And now the market is making, you know, decent rallies that people just, it's funny. Like I'm hearing some of these people saying, we don't know why it's happening. Why is this happening? It doesn't make sense, right? But it doesn't have to make sense. You just have to see what they're doing. Earlier today, I posted on my Facebook page. I said, how is it that dollar cost averaging means that you buy more stocks when the price drops. But, what do you do? What happens when the stock goes, never recovers? What do you do then? Hashtag oil stocks. And I said that because, again, I know a lot of people say dollar cost averaging is the way to go. But again, to me, it's better to understand where money is really flowing. Money has not been flowing into oil stocks in a long time. And we keep on hearing people say, buy oil. It's going to recover. It's going to recover. It's going to recover. And they've been saying that since 2008, not 18, 2008, when price of USO was around, what, $119? Today it closed at $2.19. And they keep on still telling us it's going to recover. And it's like, wow, they're telling us one thing, but they're doing something else. And so I cannot be more happy with technical analysis and learning how to read technical analysis the right way. It's important. Would we catch the exact bottom every single time? No. And that's why I didn't call my company the exact bottom, company. Call it the right side trading, meaning that we will be on the right side of the market. 9 times out of 10, we'll be on the right side. If something was to happen like it did back here, we saw it the very next day and was able to quickly adjust and get back on the right side of the track. And that's what right side trading is all about, is being on the right side of this trade. Okay. So right now, Brian is saying, hey, waiting for the 61.8 Fibonacci retracement level. And it's a possibility. It really is a possibility. But you know what I say with that is, when it get there, if it's actually going to reverse, then we will see the signs that says it's time to reverse. And that's the beauty of it, is that we'll see it. And then when we see it, it's okay, yep, that is definitely a level that we need to, now that it's reversing, let's do something about it. But if you recall last week, I said, don't try to short this market. And especially, I said, even if, this is where we were last week, I said, even if we get a red candle the next day, do not short the market. You need to see at least 3 red candles because, again, since we started this rally, we have not seen 3 red candles in a row. We just haven't. From this time we started, we have not seen 3 red candles in a row. And I said, until you see 3 red candles in a row, even if the stock drops, don't short it. The stock dropped. I hope everybody did not short, because what ended up happening was it came back up again. And so here's where we are. Market has done exactly what we anticipated it to do. The question is, if you receive the right side report, I kind of mentioned that too. It's like, what now? Is this a bear market rally or a bull market rally? Unfortunately, there's no real definition of when a bull market begins. It's interesting, right? Unless I'm mistaken, but I couldn't find any information about how do you define a bull market? Like, how do you define the official beginning date of a bull market? Now, logic would tell us if they've defined a bear market, then it should be the exact opposite, right? So it's very clear that a bear market starts officially once we have a 20% drop in price. We know that if we have a 10% drop, it's a correction. They tell you, I can't remember what the definition is for crash. There's a definition for a crash. There's a definition for correction. There's a definition for bear market. There's a definition for even a recession. Okay. Higher highs, higher lows is not necessarily the definition of a bull market, but I like that. The beginning of an uptrend, but not necessarily the official definition of a bull market. Okay. And so they have quite specific. If the market drops 20%, we are now officially in a bear market. If the market drops 10%, we're officially in a correction. If we have 2 economic down quarters, we are officially in a recession. Like they have those things. It's like, what exactly is the one for a bull market? And I don't know the answer because I couldn't find one, which I found very interesting that we could not find one. And I said, why is that? Probably because negativity sells. And so, but if we were to just take it, just using logic, right? If they say 20%, a drop of 20% from an all-time high is considered a bear market, then shouldn't it be that a 20% rally from an all-time low or the most recent low should be considered the official beginning of a bull market? Okay. Right now, we've rallied from this low here till today. That is a 31% rally. If it was flipped upside down, we'd have been hearing all over the news how we're in a bear market. Bear market, bear market, bear market. But now that we've rallied, people are still questioning whether or not it is a bull market. We'll see. So could it be a sustained rally with a correction without a correction? I'm not sure if I understand that question, Dan. Could it be a sustained rally without a correction? Okay, so meaning that if could it be a sustainable rally if we don't have a correction along the way? Yeah, I'm not sure. That's a good question. That's a good question. Not sure the answer to that would be, but I would say this. I like what Brian said, which is higher highs, higher lows. Okay, that is at least one way to start looking at it and say, this could be the beginning of a bull market. A sustained rally without a correction. The question is, how long would that sustained rally have to go before we then define it as a bull market? So without really knowing, because funny enough, it's not until hindsight that everybody will come back and say, oh yeah, March 23, 2020 was the exact bottom of the coronavirus bear market. That will be determined later on in the future. But for now, even without knowing whether or not we're in a bull market or not a bull market, the idea is trade what we see. Okay? Trade what we see. And right now, what we've seen is a market that is trying to go higher. I saw that this market was beginning to turn down here. But like everybody else, I was being patient to see whether it would be sustainable. We had a first pullback. I thought this was going to be the next leg to the downside. But once it took out this high, if you guys recall on this day, it was officially for me the beginning of the bull market. I said this would be the one that tells us whether or not this was really the bottom or not. Right now, going with what Brian said, which I totally agree, we've had a higher low, now a higher high, and we just said another higher low. And I'm not sure if we actually took out the high today. Does anybody know if we took out this high? So the high here was 2,879 and 22 cents. So 79.22 was the high here. 87.72. So we took out the high here. 79.22 compared to 87.72. So we've officially made another higher high. Okay. So in this case, we had a higher low. Then we had a higher high. We now had a higher low here. And now we have officially created another higher high. In the words of Brian, I would say this is a new uptrend. So Claudio said, even Investopedia has a vague definition of a bull market. And that's the same thing I found. February 28, 2020, a bull market is a condition of a financial market in which prices are rising or are expected to rise. The term bull market is often used to refer to the stock market, but can be applied to anything that is traded, such as bonds, real estate, currencies, and commodities. Now, if you were to go online and say, what is the definition of a bear market? They'll tell you exactly percentage-wise, or correction, or crash. Why am I saying all this? I'm saying all this because while this market kept on going higher, there's a lot of people that are skeptical. And a lot of people are looking at economic data to make them feel comfortable that this rally is actually going to become sustainable. And my answer to that is we don't know that. But what we can see is a market that is getting ready to rally higher. Is this going to be one of those where it'll reach a Fibonacci level of 78 point something and then reverse back? I don't know. But the one thing I know is when you see a market that's in an uptrend, you want to trade to the upside. There are lots of companies now that are beginning to make all-time highs. Again, I don't think that typically happens in a bear market. Companies should not, and we're not talking about just any type of companies. We're talking about Strong, healthy companies as well as small companies. We're talking about big companies in all kinds of industries are kind of making higher highs now. So you don't see companies making higher highs in the bear market. At least that's what I would think. I could be wrong, but I would think at least think these companies should not be making higher highs in a bear market. The big earnings for big companies, I believe, starts sometime this week if it hasn't already started. I think some of them have already started, by the way. And even with those earnings, I think banks, we saw all the banks, the financials came up with earnings last week. The results were not good. They went down for like a day or two, but then look at what's happening to their stocks now. Okay. Even they are beginning to start rallying back up again, right? This was the earnings on JP Morgan. What is it beginning to do? Isn't it interesting? This is where again I look at it, if this was going to be a bear market, earnings faltered, shouldn't this be like going even further down? Instead, it's going sideways and now beginning to do it, pick up. We just had a morning star signal, confirmation of the morning star signal at an uptrending support line. I mean, again, if this was really trying to go down, it had every opportunity to go down. Take, for instance, when investors were not confident about this market, these drops that we saw were humongous, right? I mean, huge overnight gaps to the downside and continuations of those. That's not what we've seen anymore now. Instead, what we've seen is this. Okay. Now, some people might look at this and say, oh, this is a flag pattern ready to come bursting down like this again. Maybe. But from what we see right now with this morning star and confirmation of this morning star, especially after bad news, if there was any time for companies like this to go down, would have been after the news. It should have just tanked these stocks and started this next downtrend. But that's not what's happening. Accumulation is beginning to take place. Okay. We talked about the VIX and how the VIX was also showing that things were going down. We first recognized this back here. We talked about how there was warning signs with all these candlesticks right here that was showing us things are about to change. The hilltop patterns that we were seeing taking place right there. We had another hilltop taking place right there. Confirmation of that. Big red candles were beginning to surface. And I said, once that starts happening, that means investors' confidence is getting better. They're no longer anxious. They feel comfortable putting money back into the market. And if they feel comfortable putting money back into the market, what we will see is the market start going higher and this starts going lower. And that's exactly what we've been seeing, is that investors' confidence is getting better. So why is it getting better? You know, unemployment record rates, record numbers, 26 million people unemployed. But investors are getting confident. Okay? Businesses haven't been open for over a month, maybe 2 months. But investors are getting confident. Why? I don't know. So they can tell us everything they want to tell us, but we're seeing what they are doing. And that's my whole thing. It's like, look, let them tell us all the stories they want to tell us. Today I was telling my coaching student, I posted a post on Facebook about, dollar cost averaging. How would that have affected people who invested in oil stocks? And they telling us it's going to recover. They've been saying oil was going to recover since 2008 when the price was at $119. Today, they're about $2 and he's still telling us the same story. Cheap got cheaper. It's going to recover. That was in 2008 when it was at $119, and that's the US Soul Stock ETF. Today, they're still telling us, hold on to it, buy it now, because it's going to recover. So they're telling us one thing, but they're doing something else. They're telling us data does not support a market that is bullish yet. They're telling us unemployment rate is so bad, there should be no reason why anybody should trust this market. And all along, they getting more comfortable buying while they're telling us, don't buy. We're still in a bear market, right? And then we go to the S&P 500. And while they telling us, don't buy, and they start going back in and buying, this is happening. But they're telling us, don't buy. Don't buy. We're still in the bear market. While this keeps on going higher and higher and higher. Okay? So it is important that we focus on technical analysis. And all those people who say technical analysis doesn't work, it's not because it doesn't work. It's just that they don't know how to use it the way that it should be used. Okay? So I'm excited because, again, this is another bottom that we call to the T. I mean, literally to the T. And now it's doing what it's doing. We made one mistake right here, but it was just one day. We corrected that the very next day, and we've been fine. So Neil is asking, do you think it's different with commodities? Oil, they can't go to zero, right? You're right. They can't go to zero, but it can keep on going down, right? So let's say, for instance, NUGT. I'll take it to the monthly chart. So it can't go to zero, right? So what do they do when it can't go to zero, but it keeps on going lower? Does anybody know? What do they do when it keeps on going lower, but it can't go to zero? What do they do? Does anybody know? Thank you, Norman. They do. They actually might not delist it. So some of them they would delist, like Lisa said. But what they would typically do is do a reverse split. Okay. And I believe they just did some on some of these right now. They'll do a reverse split. And that's why you can see something like NUGT go from, look at this, 90,000 up here. Okay. This is 90,000 up here. Sorry, let me try that again. So from 90,000 right now to $69. Okay. USO just did a 841 or 148. Thank you, Serge. Yeah, I just use Nugget as an example, but that's what they do because I know that but when you talk about all these commodities that can't go to zero, that's all they'll do. They'll just do a reverse split. And so you'll see the chart look something like this is what I'm trying to show you, where, it'll just keep on going lower and lower and lower. But that's just what they have to do. They'll just keep on doing reverse splits and reverse splits and reverse splits and reverse splits. I stopped keeping track of all these companies that were doing reverse splits. But the interesting thing is, interesting enough, the ones that do reverse split, I used to use this as a strategy back in the day. I look for ETFs that do reverse splits, and then just whatever the reverse split is, just start shorting it from that point on. Once they announce a reverse split, just short it long term. Because by nature, they're supposed to go down. And that's what just keeps on happening to them. So why am I saying all this? Because again, investors are beginning to get comfortable. If we're waiting for the data to prove that the market, the economy is getting better, we would be left behind, or at least we'll be late to the party. Maybe not left behind, but be late to the party. These guys are already done. They're not afraid of the corona anymore. They're not afraid. And maybe it's because they see how the governments around the world, not just United States, China has already committed to saving their economy. Japan has committed to saving their economy. Australia has committed to saving their economy. Europe has committed to saving their economy. I think even Canada has now committed to saving their economy. So it's not just the feds in the United States, it's all around the world. They're saying we'll do whatever it takes to bring this economy back. Now I heard one person say, don't fight the feds. Okay? Don't fight the feds. And maybe that's what they see. And so even though they don't see the improvements in businesses and they see the unemployment rate, they see where the money is flowing. But for whatever reason, they feel comfortable invested. And I think back then I mentioned how from the time they sign it into law to the time we start seeing effects will take about 3 weeks. When they signed that into law, it actually took a week and a half before we hit this high, and then now it's been going down. So the same thing that happened in 2008. They signed it into law 3 weeks later. The market hit bottom in March 9, which is kind of interesting, right? Because on March 9, 2008, we hit the bottom of the financial crisis. And now, March 23rd, 2020, we hit the bottom of the coronavirus bear market. I'm not even sure what they would coin this one, but maybe the coronavirus bear market is what they're going to call it. So, what should we be doing? I am not in the camp of, I don't believe this rally. I am not in the camp of, let's look for weakness. I'm not in the camp of, we should be looking to short this market. I'm not in the camp of, oh, we have another leg and test the lows again. I really am not. I'm in the camp of, get ready for potentially all-time highs in due time. And so any pullback I see, it's just that. It's a pullback giving us an opportunity to start buying again. And I believe Friday gave us that exact opportunity. So if you weren't buying on Friday, not buying today, it's time to start buying. Okay. So what I did is I want to show you using Magenta. Go to Magenta. Here are some stocks whereby, Magenta scan is already telling us they are coming up as stocks that you could actually start buying right now. Okay. We already know that, and all I did was just hit the scan button right here. Let me see if I can do this. You hit the scan button just so you guys can see this. It'll come up here. What I did was we had this buy cover. I want to buy. I'm not looking to cover my shorts. I'm not in any shorts. We stopped shorting the market since March 23rd. We're looking to buy. And you click on buy. You get your results. It came up with about 246 pages. Now, I'm not looking to trade all of those. So one of the first things I do is I go here to this exchange tab. And what I do is I take off all Forex and I take out the Canadian stocks. Okay. Now, if you want to trade Forex, you leave Forex on, take all the others off. If you want to trade Canadian stocks, you take all the others off and keep Canadian stocks. But in this case, I wasn't trying to trade. I'm not trying to trade Forex. I'm not trying to trade Canadian stocks. I take those two off, hit apply. That brings it down to 204 pages. Now there's 15 pages in a row, 204 pages. But that's still too much. So what I did was I went to volume. And what I did was I clicked on this filter by condition. I changed this where it says show items where the value are not set. I change it to greater than. I say greater than. And so I put 1. 1 means that this is 1 million because volume is in millions. I put 1, hit apply, brought it down to 44 pages. So that means all the stocks on this list at least have 1 million in volume. Okay, but that's still a lot. So you can either bump it up to 5 billion, which brings it down. But what I did instead was I went here and I went to price. And I did the same thing, click on the filter condition. I said anything greater than $20 is what I said. Now, some people don't want to trade $20. If you want to trade between a certain range, you say greater than this, less than this. You can go in here and pick whatever equals to, does not equal to, all that kind of stuff, right? So I just said, look, show me all the ones that is greater than $20. Hit apply, came down to 23 pages. Okay, and that's still a lot. So I went back and I changed it from 1 million. I believe I changed it to, was it 2 or 5? I can't remember now. Let me try 2. We'll see. No, I think I changed it to 5 then. Change 5 million. Was it 5? Maybe not. Let me see. Yeah, I think it was 5 billion. Okay. So that brought it down to about 6 pages now. All right. And then what I did was I changed the show row. I changed it to 100. So now I can see 100 per page. Okay. And lift it like that. And actually, I take that back. I think this one was 2 million. It was 2 million because I had 100. I had 4 pages. Oh well, maybe not. One more time. Hold on a second. I'm just trying to see because I had 4 pages at 100 per page. Let me see here. Yeah, there you go. So it was actually 1 million. Sorry about that. I went here, did 1 million. Is what I did here. 1 million, $20. But again, you can change that according to whatever you set in it. Some people like to trade stocks less than $20. You can go in there and change that to that. I'm just showing you how I did mine today. All right. So I went down there. I changed it to 100 pages. There was about 4 pages of 100 each. So that's about 400 stocks, right? It's a lot. So what I then did, is that a correct way to say? What I did next was I clicked on this right here, save variable scan. Okay. And when I saved it in variable scan, it came up in an Excel format. And it came up to be, let me see if I can bring up my Excel format. All right, here. Came out to be something like this. Okay. Something like this. That's what it came out to be. And what I did was actually I had a number of them. So here's another one where if I hit back, actually, let me try that again. Let me show you another one. Here's another one. What I did was I sorted everything. I went over here and I sorted custom sort. And what I wanted to do was I sorted everything according to column B, smallest to largest. What I was looking for, I don't know if you guys can see this, what I was looking for are the stocks that have a date that are in the month of April. Okay, so you can see this is 2020, April 27, 2020, April 27, 2020, April 27, 28. This is April 30th, May 1st, May 6th, May 8th, May 18, May 29. So I just looked for the ones that was from April and May, just April and May. All the others I deleted. So there was about 100 of these stocks here. Starting at row number 14, this went into June. I deleted all those. I didn't want that. And so I did that 4 times because I had 4 pages. And what I ended up with was this list right here. These are all stocks that, if you want to take a screenshot of this, you can do this as well. Okay, let me see if I can make it a little bit bigger. Let's see, I'll just make it a little bit bigger. All right, can you guys see this? So actually we need to take this one out because this is old. So we'll take this one out. So starting from Zion, right? You'll see right here. Take a screenshot of this if you guys need to. Or when you get the recording, if you want to pause the recording and just take a screenshot of this, you can do that. The next thing is, let me just go down. So there's about 38 stocks. So let me see if I can make it smaller where you can see all of them at one time. Let's see here. Okay, so there are 38, well, 37 stocks actually. Let me see. Why is this not moving? All right. Give me 1 second. Why is it doing this? Okay, so we started with Zion at the top. Okay, I don't know why. There you go. So Zion is at the top. From here, all you really need is these stocks. Maybe these two information right here. Okay. Column A and B. What I did was I sorted it according to dates. So you can see here Zion, MDT, LYV, KBR, UPRO, ACWV, HLT, WCN, XLF, UGI, XLK. All these right here are the ones in April. All the others are in May. Okay. Once I had that list, I didn't care about the other stuff down here. I then went back to Magenta and I started inputting that in here. So you can see this right here. So let me go back now to Magenta, Zion. And what this is now telling us, so you guys know, is now that I know that the market is ready to go higher, I'm looking for stocks to buy. So I go to Magenta and say, show me a list of stocks that are ready to go higher with the market. Okay. You come over here, you type in Zion. What I encourage you to do is go back to the first red candle, or the furthest red section, I should say, this red section on your left-hand side. Go as far back and find the lowest low in that red section. So if we're looking at this right now, price has been going down. This red section right here, the lowest low is this candle here, this candle right here. What you want to do is bring your mouse on that and then drag it out to the white part. Don't go too far out to the white, it's just a little bit out to the white. And what I'm doing here now is I'm saying I want to see what the new trend is looking like. Once I drag it out to the white section, then I go to my toggle magenta channel. You click on that, and the magenta channel would now give me this new channel that we're in. What I'm looking for are stocks that are still within the lower channel. I can get in around here. Now, I don't have to worry about whether these stocks are ready to buy or not, because every single one of this magenta is already scanned for and said, these are stocks ready to go higher. I mean, these are stocks that have a buy recommendation. So I don't have to worry about that. I know that today's candle, as long as it's a green candle, is going to be a buy recommendation. What I'm looking for is I want to see where the channel is, and I want to see where in this channel is the stock currently. I prefer that it's inside this area right here. I mean, it's okay if it's up here, but I prefer that it's down here, because what this tells me is that I can make it all the way up to this level right there. So if I'm buying this stock somewhere around here, which is about $30, and I can make it to this top right here, which is about 33, that's approximately 10% move on this stock potentially. Does that make sense? So that's what I'm looking for. But the reason why I did all that sorting according to the variable scanner is because now I can come over here to this variable scan, click on this, and what it would do is it would now show me that, look, in the last 10 years, 9 times out of 10, this stock has gone up over the next 11 days. Okay. So Shoba is asking, so do you buy on the next day, the green candle only? So technically speaking, because we programmed this, and we did this on purpose too as well, because some people's like, well, can't you just get the data that shows you what's happening intraday? And I said, no, because what we've seen is, people tend to jump the gun too soon. And so we are more about being conservative than we are being aggressive when it comes to our entries. And so what I said is, look, now that it's telling us to buy, now that this is giving us a go ahead to buy, that means we can buy this the first hour tomorrow. As long as it's not a red candle tomorrow, within the first hour or after the first hour is over, it's okay to buy this. Does that make sense, Roba? All right. And so the idea here is, now that this stock I know is a strong buy, because again, all the stocks that I have on this scans are strong buy. I love the fact that this is a stock that is in this channel. So in due time, I expect it to get up there. But what I like is, it's also telling us that This period of time that we're approaching, starting today and over the next 11 trading days, which means the next 2 weeks, this stock has gone up 9 times in the last 10 years. Okay. All right. So Dan is saying, I missed where you click to get the darker green section. Okay. All right. Let me do this again. Let's just do this. Let's refresh the page so you can see it again. So here's what the page will look like when you get on there first. The idea is to come to the very last, the lowest candle in the first or the furthest left red section. That is this candle right here. You want to zoom in from there. Take your mouse, zoom in all the way to the right, stop somewhere in the right side. Okay. Then you come to this variable scanner that you see right here. You want to click on this right here. This is what you want to click on. That makes sense? You want to click on this right here. So when you click on this, what it would do is bring up what does it do in the next 11 days. And what this is telling us is in the last 10 years, 9 times out of 10, there was only 1 year in the last 10 years where from around this time, it doesn't have to be exactly April 27, but somewhere around this time, this last week in April and the next 2 weeks going into May, this stock has gone up 9 times out of 10. Now, this is seasonality now, right? The problem with everybody trading seasonality is 1, they don't know when to start buying. 2, they don't know when to get out. 3, they don't know if something goes wrong along the way. Well, this is what Magenta is going to help you with. So is 11-day standard for this stock according to Magenta? Yes. For this particular stock. Every stock is going to be different. But it's just letting you know, in the past, starting this time, going forward over the next 11 days, on average, this stock has done about 4.51%. So the idea here now is it's now telling us to buy. This is where, if you've ever seen seasonality stocks, say, oh yeah, this stock is supposed to move in February, but then it doesn't. Now you don't have to worry about that anymore because Magenta will let you know, is it beginning to move? And that's what this is telling us. The move has begun. It's beginning to go higher. What if it runs into problems along the way? Magenta would also let you know. Each and every day, Magenta would tell you, place your stop, hold, buy more, sell. Every single day, so that if it starts seeing that it's running into a problem before the 11 days are up, it will let you know, place your stop. It will let you know, sell the stock. It will let you know, don't do anything. But right now it's telling you it's time to buy. That makes sense? And then we'll see how it goes. And even after 11 days is up, if this stock still has more room to go higher, Magenta will say, hey, don't sell. Hold on to it. And the idea is, at least now we do not have to guess anymore. We don't have to guess. We can trade with confidence, knowing that each and every day it will let us know what to do. The good thing is this stock has already had its earnings, so we don't have to worry about earnings, which is the only big hiccup that I'm concerned about. But the only thing is I like to verify that just to double check. So this dot that we see here, see this dot? This tells us that that is earnings. So I just want to go back and verify that, yes, indeed, it really did have its earnings. So if we go to Zion, our biggest thing is we want to make sure that this stock has indeed had its earnings. We come here, let's put on the earnings on this. And yes, this stock has indeed had its earnings. So this is beautiful. This is beautiful to me because I don't have to worry about earnings. Okay. All right, so 2 questions came up. Let me go back to the chart. Let me answer Neil's questions first, Shoba, and then I'll explain to you. So Neil's question is, where do you place your stop? What price do you place your stop? So once it tells you to place your stop, As long as this section up here is green, you can see that this is green and this one is red over here. This is green over here. This is red over here. This small one is green. This is red. If it's still green and it tells you to place your stop, you just look for the low of that day and you place your stop at the low. Not the close, but the low of that day. Does that make sense, Neil? Okay. If it tells, let's say today was the day it told you to place your stop, you will go out there, you'll go to Thinkorswim, you'll go to whatever platform you trade and say, what was the low of today? Because Magenta is saying I need to go place my stop, and you'll be doing this right about now, not while the market is going on. You do this right about now. If it came, this is now 8 p.m. Eastern time, or 8:45, 8:48 Eastern time. So, oh, let me go in and manage my trades. Oh, what did Magenta say today? Okay, Magenta says place my stop. All right, cool. So all I have to do is go back to the chart and say, where's the low for today? That's all we're looking for, the low of today. So the low of today is 29.51. You go in there, you place your stop at 29.51. And that's all you got to do for today. No, you place the low of today because you're looking at the chart today, right? Magenta is telling you to do that today, not yesterday, but today. If it told you to place a stop today, that's where you go. You go to the low of today and you place a stop at the low of today. Monday's low. That's correct. Are you you're in the United States, Neil, correct? I just want to make sure. But yes, it will be Monday's low. In this case, April 27th. So if it makes it easier, okay. Oh yeah, I see. So that's the thing. If you were to do this tonight, technically. So Neil was confused about should I do it tomorrow on the yesterday's low. That's if you go in tomorrow and do it. But ideally, what I try to encourage people to do is manage your trades when the market is closed. So this is where you go in and you place a low. But yes, if you were doing it tomorrow morning, you want to put it on the low of April 27. Okay. So if that makes it easier, just say the low of April 27, because that is the day that it tells you to place your stop. Okay. All right, let me answer one more question real quick before I go further. I know Shoba asked a question. He said, would you please explain the difference between strong buy cover versus strong place stop? Okay. The strong is just a strong recommendation, and the market is strongly going in a bullish direction or going in a bearish direction. It's important that you place a stop or you buy. So in this case, what it's telling us to buy is just a strong recommendation to buy. That's all it is. The market conditions are strong. Now is a good time to be buying. If you were short in this stock, it's telling you to cover, which hopefully you would not have been shorting because the fact that this is all green should tell you that it's bullish. So if I see strong and I'm saying, hey, wait a second, is this strong a bullish strong or a bearish strong? I just have to come to the color. If the color here is green, then it's a bullish strong. If the color here is red, then it's bearish strong. So the buy recommendation is saying, look, we're in a strong bullish condition, buy. Okay. If it comes to where it turns into place your stop, it's just saying, look, market conditions are still strong, but we suggest you place your stop. Because we've seen, even though it still looks like a strong condition in the market, something is happening to the technicals. Okay. But the idea here is we want to try to get into this. We know that these are stocks that have a good seasonal move going forward. The other thing you can do too as well, ladies and gentlemen, is add the 5-year seasonality and just kind of see what the 5-year seasonality shows us. Okay. So right here, let me zoom out now. I'm going to max it out a little bit. What I like to see, as you can see here, is the 5-year seasonality says right around this time, this stock does what? Goes up. So to me, this would be a stock that I would feel very comfortable trading, knowing that it can go up. But then notice what it does after that. It goes sideways. So we don't want to get greedy, right? And hold on to it forever. But one thing I'm not afraid of is each day, I know Magenta would tell me what I should or should not do. Okay. And because earnings is no longer a factor, then I feel even more confident about that. All right. Any questions on this? All the others that we have up here is just the same thing. It's just going back and repeating the same process. And so you just have to decide which stock you want to buy, right? If you know something more about a certain stock than others, then great. All this is saying is ready to go. So if I looked at this stock right now, again, I look at the furthest left, which is this, that is red. I look at the low. So the low is either this candle or this candle right here, either one. I'm going to go with this one as the lowest one. I bring my cursor there, drag it out to the right until I get to the white space. Boom. There we go. Click on my toggle switch. And now, can I take this trade? Is the question. How many people say we should take the trade? How many people say we cannot take the trade? Is this a trade we can take or not? Yes. Absolutely yes. Okay. This is where, if you understand candlesticks, we can see a morning star here. We got confirmation of that. But it's just the mere fact that it is now telling us a buy. How do I know that this is a buy? Because I know the scan is just, the scan only look for stocks that are to buy. But the biggest thing that I like about this is exactly what Shoba said. We're at the lower end of the channel. That's where I want to be buying. I don't want to be buying up here. I don't want to be the person buying up here. I want to be the person buying down here. I don't want to be buying up here. I want to be a person buying down here, right? And so in this case, you want to buy, this is perfect. And if you go back, you can see, look, from the time that it starts moving from this top to the time it gets up here, how long does it take? This took 3 days, maybe 5 days before it started turning red. Okay, we start from here. 1, 2, 3, 4, 5, 6. 6 days before it starts turning red. Well, how would you plan for this one now? If I go 5 to 6 days, we got about 3 to 4 days, which is this week, for this stock to do something. What about seasonality? Take a look and see. Yeah, okay. Let's try this again. Let's max this out. Here's the seasonality on this one. Over the next 26 days, that's a month from now, this stock rallies. Earnings is somewhere down the road. So this is something, again, I'll go back and say, hey, when is earnings? It says May 21st. Let's go ahead and double check this just to be on the safe side. MBT. When is earnings? Okay. Well, we know earnings is nowhere around the corner right now. So let's just do one more thing. Let's see if we can find exactly when earnings is going to be. So I'm going to go here. Let's do 30 days out. Okay. Yeah, right here. So we have earnings on May 19th, somewhere around there. Okay. May 19th. All right. So we still got time. We got time to be in this trade. So I would look at this. I know that it has this. What about the 5-year seasonality? What does the 5-year seasonality tell us about this stock? Let's see. Can you guys see what 5-year seasonality shows us? This stock keeps on going high, and it even goes past this time right here. But is this now a good time to start getting into a trade like this? Chances are very high. Are these stocks out of the scan? Yes, every single one of these stocks up here. So this stock, this one, they're all from the scan that I showed you. So again, you go back to that list. And again, my goal is that you guys are able to create your own list. Okay, but it's the same thing. Okay, these are the same stocks that you're looking at. We first talked about Zion, then we talked about MDT. And what you're seeing here is all these that are showing this date right here, these are all stocks that have that variable scan beginning like today. Tomorrow, the variable scan for Hilton begins tomorrow, and WCN and XLF, financial sector. Okay, financial sector is saying that it begins tomorrow. Is it interesting that a lot of financial stocks did well today and the XLF did well? Could it be that seasonality is kicking in? Well, based on technical analysis, it seems like they're beginning to buy. And that's what Magenta is suggesting. All right. So some of them will start on May 1st. This is the SPX. I've been saying the SPX tends to rally in April, May. Most people tell you to sell in May and go away, but it seems to be the opposite happening right now. So it's INSG on this list. I don't see that on this list. But it doesn't mean that it doesn't have its own thing. It's just that it's not one of those that is showing up on our list here. So you go back here. I like the fact that we have 5 years, and I like 5 years. Now, if you go back here and you add the 10 years, well, we can see, wow, even the 10-year suggests that it goes up around here. So for the last 10 years, and that makes sense because it's 9 times out of 10. But I like the 5 years because I want to know what has it been doing in the last 5 as opposed to just the last 10. And I can see, and it does well. It has about a 5% move over the next 26 days. Now is beginning to start. Okay. So Bruce is saying, look, I haven't taken your market bottoms course, a candlestick course, which states wait for confirming candle. But Magenta it seems to say buy on the candle in the lower green of the bullish trend. Two separate systems, yes? Not necessarily. It's actually the same thing. It's just that this is now adding to that. Okay? It's just adding to it. Because if you looked at what I showed, I said, I still want to see candlesticks, right? And I mentioned the fact that we have a what right here? A morning star. And we got confirmation of that morning star. So I'm still looking at candlesticks. Don't get me wrong. It's just that now I'm even more confident about this trade because not only does it have my candlesticks, but it also is telling me to get in at the bottom of the channel. Okay. Does that make sense, Bruce? So the idea here is I'm just trying to show you guys, look, we don't have to guess. There are certain patterns. There's certain ways we can take advantage of the market. We just need to be patient, do it at the right time. And when we do it at the right time, we can find the right type of trades. Now, you might look at this and say, look, 5% in the next 26 days is not enough for you. Then that's okay. That just means that this stock cannot give you the type of income you're looking for. Now, if you choose to trade any other kind of way, whether you want to leverage it, you want to do options, that's on you. That's okay. All I'm trying to help you guys see is when people say you cannot see patterns that would tell you what's about to happen to stocks, it's not true. You can see it. And now Magenta is making it easy for you to see that. Okay? We don't have to trade what's on the headlines. I'm not sure if this stock made the headlines, but I know I didn't hear about it. I'm not sure if Zion made the headlines. I didn't hear about it. And I actually like it that way when they're not making the headlines. Because by the time they start making the headlines, it becomes volatile. If I can get into these stocks quietly before everybody starts talking about it, and then exit after they start talking about it, that's to our advantage. Make sense? Let me see here. I want to see if I can. Let me see if I can find XLF. So I thought this was interesting. A lot of these analysts were like, "Oh, shocked! Oh, market is doing really well." I mean, even without doing anything, hopefully you guys can see we have this up, we have this down, we have this up, we have this down. What do you think it's trying to do right now? Seems like it's trying to go up to me. That's even before we draw the magenta channel. What does the 5-year seasonality look like on this? Okay. Yikes. Look at this. Okay. So yes, if Zion doesn't qualify as a candlestick pattern that we teach, then yes, you will want to pass on that. All right. Because it's important that you have as much technical analysis on your side as possible. This is one of the reasons why I like trading stocks. I have choices. I don't have to force myself to trade anything. I need to see everything I'm looking for before I do something with it. Okay. But I believe Zion actually had technical analysis, Bruce. So let me go back here to Zion. It had the candlesticks there. Let's go here. Okay. Actually, no, you're right. It doesn't have it. I must be thinking about another stock. But no, it does not have it. Yeah, it doesn't have it. Now, interesting enough, okay, depending on how you want to see this, this was actually a morning star right here. This was the confirmation of the morning star. Now, if we bring our cursor here, this is the first time Magenta told us to stop buying. The very next day, it told us to place a stop. The day after that, it suggested buying again, but it's a red candle. We don't buy in red candles. Next day, it suggested place a stop. If you got stopped out on this day, now it's telling you jump back in. Okay. So technically speaking, it doesn't have a candlestick signal today, but the candlestick really started back down here and is now just continuing going higher. XLF, I like the seasonality on this very, very well. Let's see what the 10-year has done on this. It's okay. Beginning part, and it goes sideways. And it's interesting because we can see that it goes up, it pulls back, this one goes sideways, and then it takes off again. So we have to be aware of that. So that tells me expect some type of a slowdown somewhere in mid-April, mid-May, and then it kind of goes up again. I can come over here and say, show me the variable scanner so I can see what the variable scanner shows me. It shows us that over the next 33 trading days, XLF financials go up. It has gone up 9 times out of 10 in the last 10 years, on average 5.84%. So the question is it okay to start buying now? And what we see here is if we take the lowest level right here, zoom out, let's go all the way out here. What is it now telling us? Clear this up. We take out the 10 years. We don't need it anymore. We don't need the 5 years anymore. Let's put on our toggle switch. Is this something we can start buying? The answer should be yes. Okay. I can see right here, we have a morning star, confirmation of the morning star. Okay. This tells me that we're in the lowest section of the channel. We've had up, down, up, down. What do you think I expect this market to do, or this ETF to do, or the financial sector to do? And because now I know seasonality over the next 33 days, that tells me I'm expecting seasonality-wise financials to do well in the month of May. Okay. So let's do this one more time to show the variable scan addition again. All you have to do is you go down here where it says variable scanner, and you want to click on this button. That's what you want to click on. If you click on that, it will give you your variable scanner. My goal is to try to find the variable scanners that are happening right now. I don't want the ones that are happening later on down the road. I want the ones that are happening right now. So if I go to, let's say, a company like Apple, for instance, if I was to go to Apple, you'll see that Apple does not have a variable scanner showing up right about now. I click on the variable scanner here. This variable scanner is not until August. Not interested in that. I'm looking for the ones that the variable scanner is showing up right now. Why is the variable scanner important? The reason why the variable scanners are important is because it's letting us know this stock, seasonality wise, has performed really, really well in this season. So if I know it has a 9-1 track record and has performed well in this season and is starting right about now, then I want to find those type of stocks that I can get into. Knowing that the biggest challenge most people had about seasonality in the past no longer has to be an issue, which is, should we buy? When should we buy? When should we place our stop? How can we tell if it's not going to work this time? What if something is going wrong and we need to get out? How do we know? If it tells us to get out within 3 days, do we do that, or do we wait until the 33 days is over? I cannot tell you how many times I've seen people hold on to a seasonality stock for the whole duration because they think it's going to come back and it never does. And then they give up on seasonality. And that's why I've always said the biggest challenge and mistake they made is relying on seasonality and not on technical analysis. Once you understand technical analysis, which is now what we've put into Magenta, and let the algorithms do all the analysis for you, then you can trade seasonality much, much successfully. Okay. So anyways, all these other stocks are doing the same thing. The idea is just make sure you understand how to use it properly. Make sure you go to the furthest left, the furthest red one. So if this was green, then this would be the furthest red one, right? You want to go to the furthest red one, start from the bottom, drag it out. Same with this one, right? You go here, you drag it out. You go here, once it updates, you click on the toggle switch. Your goal is to make sure that you're trading in the lowest section of Magenta. Okay, this is a right side candle. We've got confirmation of the right side candle. This is stock that, again, I feel comfortable. Right? If you understand what candlesticks, all the secrets that I tell you guys about what candlesticks can do, that would help you make a decision as well too. All right, so I'm going to do this. Again, these are all different stocks, but they all doing the same thing. I see Phyllis asking a question. So let me answer that question for her. She wants to look at DD. Is DD Dunkin' Donuts? No, it's not Dunkin' Donuts. I'm not sure who DD is. Let's take a look at DD and see what is DD telling us. Okay, so we'll come here, drag it out. All right, so here's what DD is telling us. What should we be doing today based on Magenta? Phyllis, can you answer that? Anybody else can answer it too, just so you see. What should we be doing based on today's trade action? No, it's not telling us to buy. Leave it. Thank you, Bruce. Hold and wait. So what does that mean, hold and wait, or hold or wait? Oh, okay, you're already in. Okay, gotcha. So if you're in, it's saying just hold on to it. Don't do anything. No action today. If you're already in, it's not telling you to place a stop. It's not telling you to buy more. It's not telling you to sell. It's just saying hold on to it. Just hold on to it. That's what that hold stands for. If it tells you to wait, that means it's assuming you were not in the trade yet. That's what the wait is for. So it's saying wait, don't jump in. Okay. So if you bought it at $38.47, you are making some good money right now. And what it's telling you right now is just hold on to it. Don't sell it. Don't panic. Don't get nervous. It will let you know when to place your stop. The next thing I would like to do is like say, oh, what is the 5-year seasonality like? It goes sideways. Okay, so not necessarily exciting. What about, does it have any variable scan on this? Okay, so I can come here and see. Let me see if it has any variable scan. Well, here's interesting. We can see that pretty soon by May, it actually has one of its worst times. Actually happens in May. So now I'll be paying very close attention, because once it starts saying place your stop, obviously you definitely want to place your stop. And if it tells you to sell, I can guarantee you there's a reason why it's telling you to sell. Okay, so you've made some good money, but you don't have to sell today. Keep it. Now it has earnings coming up, so I will watch out for earnings. Before I answer your second question, let me answer Brian's question. He's been asking this question, INSG. Let's take a look and see what INSG is telling us. Okay. So again, we go to the red section. We're at this low right here. We can see the low is this green candle. We'll take this green candle. Why do you not like trading on earnings? Because nobody can predict what's going to happen on earnings day, right? So if you've already made that profit, what if it gaps against you? Now, when you get into the coaching program, we teach you how to trade earnings. But for those who are not, I just say, it's just safer until you understand how to trade earnings. It's just safer to, take your profits and move on. Brian, what is this telling us to do? Anybody see this? What is this telling us to do? Wait, are you in the trade yet, Brian, or are you thinking about getting in? All right, excellent. So it's telling us to hold and wait. That's exactly what we do. You're already in. So if you're already in, it's just telling you to hold on to it. Don't do anything. Now, I see this dot right here, so earnings might be coming up. You might want to double check that. If earnings is coming up and you already made profit, it might not be a bad idea to take your profit unless you know how to trade around earnings. Okay. But if not, I'd say take your profit just to be on the safe side. But if you were looking to get in, it's too late. You missed the boat on anybody who's thinking about buying this. You've already missed the boat. It's telling you to wait for the next bus. All right. Go find another stock. Go find stocks that are at the bottom right here and are just literally telling you to start buying today. Maybe as early as yesterday, but it's fresh. And that's what that list was. Okay, guys? Any last questions? I think I saw one more from Phyllis. Let me see, and then we'll end with that unless anybody has any other questions. Let's see. I don't see your question anymore, Phyllis. Let me see. Oh, MGM. Let's look at MGM and then we'll end with that. Okay, sure, but thank you for letting me know. I'll take a look at that. Okay, I'll definitely take a look at that. All right, so here we go. Let's analyze this one. Drag this out. Okay, so what is it telling us to do right now, Phyllis? MGM. What is it telling us to do today? Buy. So if we look at this and we say now let's look at the where it's positioned in this new trend. Is it in a good position? Absolutely. Okay. So it has earnings. Now the only question is I'll then go back and say, did earnings already come out or is it about to come out? MGM. Let's see. Earnings is coming up pretty soon. So this is where, again, unless you know how to, earnings is on the 30th. So that would bring us to when? The 30th is this Thursday. And that's after market, I believe. So if you know how to trade earnings, that's fine. If you don't know how to trade earnings, then I'll say at least try to get out before earnings day. Okay. Pat is saying, how can we be sure that we have the latest version of Magenta software? The latest version is what we have uploaded. That's for sure. So if whatever you're seeing right now, that is the latest version. Okay. So if you go on Magenta, every time you log into Magenta, that is the latest version. The only people that do not have the latest version will not even be on this call. Everybody on this call should have the latest version. So you shouldn't have to worry about it. But if you still need help with that, Pat, just let me know. Okay. All right, guys. Thank you so much. Be safe out there, ladies and gentlemen. Don't overdo it. Okay. Thank you, Alice. Oh, I forgot you were on the call, Alice. Don't overdo it. The market has a way of letting us know when it's time to make money and when it's risky to make money. Right now, it is telling us it's time to make money. So let's go out there. Let's do our work. Go make the money, and then we'll see how everything goes. Be well out there, everybody. God bless you. Until next time, stay safe. Thank you, guys. Bye bye.